Good morning, good afternoon, and good evening, everyone listening. We welcome you to the inaugural session of the 2025 Solution Webinar Series. Just to begin with, if you leave or if you receive some issues with the audio, please refresh your screen with F5 on PCs, open Apple plus R5 on Macs. If you don't hear the presentation or if the slides aren't advancing, please refresh your page. Let me begin with today presentation or the panel discussion. This is the title says the Indian Auto Frontier, Forecast Trends, Challenges, and Strategic Insights. I'm your host, Gaurav Vangaal, and the speaker for this presentation. And with me, we have Mr. Shailesh Chandra, and I'm honored to welcome our esteemed panelist, Mr. Shailesh Chandra, the Managing Director of Tata Motors Passenger Vehicles Limited and Tata Passengers Electric Mobility Limited. He is also a distinguished member of the Tata Motors Executive Committee. Under his distinguished leadership, passenger vehicle business has grown 4x since FY20 and acquired approximately 85% electric vehicle market share in FY23. And this is despite the global challenges. I think he has many feathers in his cap. Joining him is Mr. Vinnie Mehta, the Director General of Automotive Component Manufacturer Association of India. Prior to joining ECMA, Mr. Mehta has headed the Manufacturers Association of Information Technology, the apex body of the IT hardware industry in India. So we are privileged to have them with us today. Welcome, Mr. Shailesh, sir. Welcome, Vinnie, sir, for the S&P Global Mobility webinar series.
Pleasure to join.
So, before we kick off our presentation, I would like to set the stage by referencing some of our recent production forecast numbers. Over the next few minutes, I will share some of our presentation of some of on the outlook on the Indian market. And following that presentation, we will transit into the panel discussion. To begin with, let me push you the first presentation. That's a first slide that is coming on the world economic growth rates. I think when we go out, when we talk to any of the global market, and when we talk about the standard numbers of the S&P Global, I think this is the first slide which we see that how India stands out clearly. If you see this number, if you see the India number, you see the 6.4%, I think, in 2025, and this is expected to remain same by 2026. If you see, when you compare with the average, which is around 2027 to 2032, I think we are again the highest numbers we are posting in when we compare the other countries, whether it's a China, whether it's a world, and that is what is bringing focus back to Indian market. I think today every headquarter, whenever they're talking about the GDP growth rates, the sustainability or the stability in economy, I think India comes into the first preference, that because India has shown the sustainability into the global world. And this is not only the real GDP numbers. I think we are also doing very well in terms of the other factors also. And there are multiple factors which are going to support the sustained demand. First of all, as I already mentioned, that economy is doing very good for India when we compare with the other markets. But yes, growth is going to remain approximately 6%. At the same time, inflation, which is doing well. I think it is not high when you compare with the relative countries with other countries. We are going to do approximately 4.6% in 2025, and as per our assumption in our forecast, I think we have already taken 50 basis point in our base forecast that this is going to be cut by the Reserve Bank of India or the Central Bank of India. So 25 basis point has been already been taken out. I think we are expecting another 25 basis point cut in next coming months. There's another concern which is running around in the short term, which is a dollar performance, which is a very strong performance. But yes, as per the assumption for us, I think we have taken an 87.56 INR per USD in 2025. and 88.23 per USD in 2026. So that is the assumption which Indian for Indian forecast, Indian economy we have taken by our economists. When we talk about the sustained demand, yes, demography is one of the major support factor for Indian growth, and we become the most populous country, surpassing the China in 2023, and and we are the young country when we compare with the other markets. I think we are very young country, and another factor which plays in favor of India is the car density. I think we in 2024 we were around only 37 per thousand, and we are set to increase to 52 per thousand by 2032. And when we talk about the park which is already available, and if we are going down, I think India has a potential to utilize their park. We have seen this in the Delhi NCR region, that how the NGT ban has renewed the car market, and how the people were forced to buy new cars after the 10-year diesel ban. And even I got impacted, to be very honest, with this ban, and I had to purchase a new car. So I think this is a set of pool available for Indian government that can continue our sustained demand. So India has a park of 52.5 million in 2024, and if we see in a long term, if our growth rates are going to go down in the domestic side, I think government can also look into the scrappage policies, mandatory scrappage policies, going towards the tier 1 cities or the tier 2 cities, and that can also help the decongestion from the metropolitan cities. So I think this is one of the major factors which can play a critical role in the next 7 to 8 years, and till the time we have a strong park available in the Indian market. When we talk about the increased investments, I think if you ask me from last couple of years, if any plant is getting inaugurated, and if any global headquarters or global management is traveling to India, I can assure you, I have presented multiple clients about this, that how India is sustaining these numbers and how India can continue this path of growth. So we are expecting a straight time capacity increase from 7.03 million units in 2025 to 10.8 million units by 2032. So it is for the light vehicle production. Please remember that S&P Global Mobility takes care of the 0 to 6 ton light vehicles in their standard forecast basis. Okay, so then so we have, and almost everyone, if you talk to any car maker today in India, whether it's Maruti Suzuki, Tata Motors, Hyundai, Mahindra, Toyota, I think everybody's putting their own plants. Everybody's looking to expand the market, and I showed you that how the focus is coming back to India from the global headquarters, because other markets are not doing well. And besides the car makers, I think almost every supplier is investing in India. So that's one of the major factor, because when the supplier comes, they always look of the economies of scale. And we are going to talk about it because Vinnie sir is with us today, and we are going to talk about how the confidence is going to be there in the supplier community. And the next point is the car makers are looking to add exports. Today, when the car makers are planning to bring some models in India, specifically global car makers, they always try to bring some export volumes to Indian market. And I have seen this from last couple of years, that how each region has been analyzed by the car makers that can bring additional export volumes to India. So with this year, I think when Maruti Suzuki is going to launch e-Vitara, or they're going to take it as a rebased version towards Europe. I think with YY8, I believe that they are going to add another new destination for Indian market for the exports. And when we compare the global production overview, you must have heard me saying that India is standing out right now continuously on the real GDP term rates. But yes, if you talk about the complete region to region, if you see this slide, North America is expected to decline 3.2% this year. That's what we are expecting. Europe is also going to decline by 3.1%. All the mature markets, whether it's Europe, North America, and Japan, Korea, everybody is struggling. While if you look at the green circles, you will see the South Asia. India is the major one because ASEAN is also struggling here. So 2.9% growth rate we are expecting from the South Asia region, but overall India is growing much bigger than this percentage. Then the mainland China is also growing, and the South America, Brazil is also growing. So Brazil, Russia is coming from the lower side. India, China, South Africa. I think all of the BRIC nations are expected to grow this year in 2025. Now I move to the one of the very important point, which is emerging as a good data points when we compare the major economies like mainland China, United States. Now this slide shows the top 5 market CAGR and Indian performance in last 10 years, and how they are going to do in next decade from 2024 to 34. So if you see from 2014 to 24, despite the major hiccups which has happened in Indian market, or whether it's a emission norms jump, or whether it was a semiconductor crisis or any other crisis which has been emerged from the global market, I think India has done well with the 4.6% CAGR. While we are expecting the next decade also from 2024 to 34, India is going to continue with this such kind of CAGR of 4.3%. Even when I go out, when we discuss this numbers with most of the car makers globally, or the auto fraternity supplier community, I think people are having more confidence in the Indian market, and these numbers of 4.3% looks to be very settled when we discuss this with our clients. But yes, when you compare with the global countries, you can see very clearly whether it's a China, whether it's a US, whether it's a Japan, whether it's a Germany or Korea. I think we are doing very well, and we are expected to do very well going forward also. And this is bringing a good amount of confidence into the global headquarters. And on the right side, if you see the light vehicle sales, India became third largest market in the light vehicle sales in the domestic market. And I think we are still continuing in 2024 this, while Japan has decreased the gap. But yes, we are still maintaining the third largest market pool. In the light vehicle production, the gap is very high. If you see, Japan is at approximately 9.2 million light vehicle production units, while India has only 3.6 million units happen to be. So next, I think this number is not the 3.6. This number is approximately 5.75 million units. So just ignore this one. Now you move to the light vehicle production versus sales and production. So this is a long-term scenario by 2032 for us. If you see this 5.6 million, 5.7 million in 2024, which I was correcting in the last slide, we are expecting that this should be the 6 million by this year. So we are still showing a growth of 6%. And this, when we have recently heard multiple car makers or multiple bodies to say that this is going to low, but in the production term, I can tell you that there are additional exports which is going to add on this year, specifically from Maruti Suzuki, Toyota. I think they're going to add some of the good numbers to the production terms, and that is helping them to move out from the domestic slowness what we are experiencing. Because in domestic terms, we are already only experiencing 3.5% or 3.8% growth rate. But in the production terms, we are expecting a 6% growth rate in 2025. We are going through a phase where the affordability has been impacted, I think, at the entry segment, which everybody talks around. But yes, it is slowly moving up on the B segment also, B segment entry, what we are noticing. And the high content of the cars are actually impacting the high content is actually impacting the affordability segment. When we move to the BS6 and BS7, I think we are expecting some of the slowness again by 3% in 2029. But yes, by 2032, we are expecting 8 million market for light vehicle production, and the gap of this is approximately 1.2 million. Don't take it as a simple exports, because it also contains the inventory or the unknown vehicles where where it is getting export from Indian market. So this is just a simple calculation from 8 million to the 6.8 million what we're expecting into the domestic sales by 2032. Now we move to the another reality check, which has been, I think, which has been mentioned recently from last 1 year about the slower EV adoption. So this chart on the left side shows the two lines, which one is from the 2024 March forecast, which was released by the S&P Global Mobility, and this is a recent forecast, which is on the February 2025. So if you see, we have revised down our numbers from 22% to 19% by 2030, and this is expected to continue as of now, because we are facing a tremendous challenges towards the ICE or sorry, the EV numbers, and there are continuous delays, project delays we are experiencing right now, and the extension of the current ICE vehicles we are experiencing from the each product, each portfolio of the car makers. When we talk about 2032, I think this is ICE is going to remain the leader with the 42% in the vehicle production. But yes, if you see, the BEV still has a chance of 23% by 2032. So that is what we are projecting for 2032. Yes, we are also experiencing a good inclination towards hybrid vehicles. The car makers, those who were not looking for hybrids earlier, now I think they are evaluating hybrids as a good go. The car makers, those who are looking for only born EVs, I think they're also trying to add range extenders or the PHEV segments, I think, in the long term. So that's why in 2032 we are also started showing the PHEV. Maybe it's a very minimal numbers, but yes, these numbers you can see the more development is expected to happen towards these segments also. So it will be a multi pathway. It will not be very clearly towards ICE and the BIVs. We have experienced this from last 1 year that this is HEVs are going to play some major role going forward. So this is the last slide for my deck. That now this is the design parent, and what we are expecting is that Maruti Suzuki, even though they are going to continue the domination in the Indian market, but we are expecting that the market share is going to decline from 41% to 33% for Maruti Suzuki, while Hyundai with the Kia together are going to sustain these numbers. Tata Motors may have only marginal impact, while Mahindra, we are expecting they should go down from 14% to 12%. The reason is that we are expecting a CAFE 3 norms in between. We are expecting a BS7, and diesel dominance can be impacted there. So that's why we are expecting some dip in the market share of Mahindra. And who is the winner? I think the clear winner emerges out to be the Toyota. And because Toyota has been helped by Maruti Suzuki, because of the good alliance, I think they have given a good entry points with the Glanza and other vehicles. And I think Toyota in the long run may bring their own vehicles, and then they can continue the leap for the next decade. So this is the one which I can say has a major impact. So I have a first question coming around for the audience from here. Is your company planning to increase investment or add capacities in India? So you can answer this as a yes or no. I give you only 30 seconds to answer this. Let me repeat. Is your company planning to increase investment or add capacities in India? Yes or no? So thank you very much for your answers. We will show you the answer in the end of the presentation. Let me begin the panel discussion now. And with this contest in mind, I'm excited to welcome our esteemed panelist, Mr. Shailesh Chandra, Sir, Managing Director, Tata Motors, and Mr. Vinnie, Mehta, Director General, ECMA, now who will further share their insights on the Indian market. And let me dive with into our first question to Mr. Chandra, sir. Shailesh, sir,
Yes.
as you must have seen, the S&P projects 8 million market by 2032. And given the current market landscape, I have experienced a good confidence, but how Tata Motors is confident in the India's growth trajectory in the automotive sector over the next decade? Can you give some elaboration about your investments regarding new plants or the vehicles?
Yeah, thank you for the question. See, over the past 4 5 years, if we see the Indian passenger vehicle industry, it has experienced a very sharp growth, post COVID. And also FY25, if as per the projections, and this is the last month of FY25, we see that this will be possibly the third consecutive year of record breaking volumes and again surpassing the 4 million mark. And from Tata Motors' perspective, we are highly optimistic about the industry's growth prospects. You talked about 8 million, if I'm not wrong, as far as
Yes, yes.
FY32 is concerned. I have a view till FY30, which we believe should be about 6 million units, which is a 50% growth from where the market is today. And this is because we have seen over a period of longer time, and you also presented in one of your slides that the secular growth trend of the passenger vehicle industry has been in the zone of 5 to 7%, and it remains in line with the secular growth trend of GDP growth also of the country. And there are few key factors, which we believe will sustain this secular growth trend. The first is that the penetration of four wheelers remain at a very low level of 30 40 kind of per thousand population. And as the income level increases, this is expected to increase significantly. And I would just take a parallel from what China was in 2014, when the GDP per capita of the country used to be about $10,000. Uh, that is the level at which India is today. And at that point in time in 2014, the penetration of cars in China used to be about 50, 55 per thousand. And it's pretty similar to where India is, slightly lower as far as India is concerned. But today, when you see China, it is 10 years down the line, it has reached 250 per thousand. So this is a big driver. The low penetration level which exists today is likely to go above to 200 per thousand also over a period of time. So this is one big factor. The second factor is the number of household, high consumption households in the India is also rising rapidly, and we believe that by 2030 31, nearly 200 million households will earn more than kind of 6,000, 7,000 dollars per annum, which is doubling from the current levels in terms of number of households. So which means that additionally 100 million households will enter the potential customer base for the car buyers, I would say. So therefore, this is another big factor. And third is, over a period of time, we have seen, let's take, for example, 10 years back, the average replacement cycle for a car buyer used to be 6 years, and we have seen of late it has come down to about 4 years because of frequent model upgrades, advancements in vehicle. People want the latest uh, technologies embedded in the cars. So there is a faster replacement cycle which is also going to. So there are these two, three big factors which we believe will help the PV industry grow in longer term. Now, from Tata Motors' perspective, believing in this kind of a growth story, uh, I think, last 3 4 years, we have seen about 4 times growth in our company in terms of volumes and 5 times growth in terms of revenue, which alongside it has come with a very sharp increase in profitability. So some of the projections that you showed in your last slide about the competitive landscape and how market shares would pan out, I may differ, but I believe that Tata Motors should be able to get a much higher share than what you had shown. And our confidence is reflected in our investments in manufacturing facility. We have already invested into manufacturing facility with capacities going up to 1 million already, with the recent acquisition of the Ford plant in Gujarat, which is in the western part of the country. So that shows that how optimistic we are about our growth. And of course, underlying that is definitely a strong product plan to increase our addressable market to 80% from current levels of 52%. And also, we have announced that in Tamil Nadu also. Yeah, so it just shows that there is a confidence in the PV industry growth story of India, as well as we are putting the cart ahead of the horse in terms of capacity creation. So, on top of that, also from a network expansion perspective, we have been aggressively expanding. 5 years back, we would have been about 800 touch points, and now it has increased to 1500. So, overall, high level of confidence, and that high level of confidence from a Tata Motors strategy perspective reflecting in the capacity creation and network expansion.
So thank you, sir. I think the confidence looks very high because I can see the continuous investment from the Tata Motors. But just to clarify the fact, we the number which I have shown, 8 million, is a light vehicle production numbers. Just to clarify for the audience, and the numbers with 6 million you're asking is only for the PV segment for 2030. So light vehicle contains 0 to 6 ton LCV. So I do have the LCV production side, and you were referring only to the sales side for the PV. So there's a that I think more like we are aligned with the numbers what we are projecting for the global. So let's take you towards the EV side because we also showed you that we are going for the reality check, but at the same time we are also projecting that EVs actually is going to happen and they will going to take the second largest share in the powertrain side by 2032. We are forecasting 19% by 2030 as of now. But how does Tata Motors plan to enhance its EV offerings to meet the projected demand? What are your expectations from the EV penetration in India? So can you please throw some light here?
Sure. See, the way we see from Tata Motors' perspective is that electrification is a national imperative because of the net zero goals and the imperative to reduce the oil import. And to that extent, we are definitely going to see transition towards zero emission technologies. The question will be by when, right? It can be 10 years, 15 years, or whatever. But we clearly see that government is also very cognizant of this fact, and therefore we have seen the policy instruments coming into play to support the transition towards zero emission technology, whether you talk about the FAME incentive or a PME drive policy or a lower GST rate, road taxes not being there, PLI scheme. I think policy direction is clearly showing that inclination is towards accelerating the transition of the country towards zero emission technology. And so is the case for regulation also, whether you talk about cafe norms being made more tighter to literally force the OEMs also to increase the supply of models which are zero emission technology. So therefore, we are very optimistic of the growth. Yes, the penetration levels today stand at 2.5% and so on, but it has started from 0 to 2.5%, which is, if you take in terms of reference of number of units per year, it has
Mm-hmm.
increased from just 2,000 units in a year in FY20 to now nearly a lakh unit per
Yeah.
or 100,000 units in FY24. So, we believe that last 5 years the penetration has been low because of lack of participation of OEMs into the electrification space, and therefore the ecosystem players also not joining in full force. But 2025, this situation has completely shifted. All the major OEMs have launched EVs because they see the imperative because of all the reasons which I mentioned. And you are right in your projection that by 2030, we are very aligned to what you have shared, that the penetration can be around 20% of the PV
Yes.
market. And as far as Tata Motors is concerned, we are today, while the country is at 2.5% penetration of electric vehicles, we are already at 12%. And we believe that in 2030, when the industry reaches about 20%, we should be crossing 30% penetration. And that is going to happen with all the actions and strategies that we are adopting to remain the market leader and expand our penetration in this space by first having the widest EV portfolio, which starts from a price range of say 9,000 to 25,000 dollars, and These will be very aspirational nameplates, including Harrier, Sierra, Avinia, all these strengthening the portfolio from the price range which I mentioned. Also, we are investing into the pure EV architecture, all the disruptions on the technology side, whether we talk about autonomous car, connected car. We already have the widest EV network, more from a service perspective in 190 cities, and we are fast expanding into rural areas where we see the next wave of growth coming on the EV side. And we are the players who have worked very closely with the ecosystem players, namely the charging infra players and all. And we have just declared a plan of increasing the infra to 400,000 in the next few years. And so, therefore, we are not only working on products, techs, but also expansion of network of service and working with the ecosystem players to mainstream the electric vehicles. So that is our perspective on EVs.
Well, that's wonderful, sir. We can I can assure you that the ecosystem which Tata Motors has developed over the years is actually is working for the India growth for the managing the complete ecosystem, not only for Tata Motors. It's going for the complete EV ecosystem for India. So let me bring Vinnie sir into the discussion. Vinnie sir, what's your perspective on the domestic? I think it's been time. Sorry for waiting you. Uh, Keeping you wait for a long time, but yes, I need to understand your perspective also on the domestic market. How is the supplier community confident on the India's growth? How do you see the domestic market potential and the export market potential for India?
Gaurav, thank you for having me. And no issues waiting. Ours is very much a derived demand. So, therefore, in some sense, the vehicle manufacturers set the tone. And if the vehicle manufacturers are confident, then the auto component industry is going to be very, very confident. I mean, both you and Shailesh, in your slides and in what you talked about, spoken very confidently about the growth prospects of India, and I pretty much echo the same. Can't be differing. And also, it is not just our supply to the OEMs. We also have a very, very strong export portfolio. So last year, the auto component industry touched a turnover of 74 billion US dollars, and almost 30% of that goes to exports. And our strong performance comes on the back of the good performance across all segments of the vehicle industry. You focused largely on the PAS vehicles, and similarly, what we've seen is that a good comeback of the two-wheeler industry. And I would say, while commercial vehicle has been a little flat, but that's largely because of the elections and some of the government programs yet to take off, or somewhat in the inception stage. And probably as we go along, the commercial vehicle industry will also gather a lot of steam. So on back of that, our supplies to the OEMs have been quite good. And exports have been very, very good. That apart, we also have a very vibrant segment of the industry, which is the aftermarket, that's growing at 10%. So exports stood at 20 plus 21 billion US dollars. And what's very interesting is that we are now an export surplus. So for last few years, the imports were more than the exports, but now we have an export surplus, and that's largely because there's a huge focus by the OEMs and the tier ones on localization. So we are witnessing a lot of changes in the industry. Shailesh spoke about their focus on the electric mobility industry, and that is also very well reflected in the supplies that the auto component manufacturers do. And almost 6% of our turnover now comes from the EV industry. And as the segment evolves, you will see more and more focus of the component industry also towards supplying to the EV OEMs. So there we are. I think the auto component industry today is a well evolved and a very strong industry today. And we are hoping next few years, at least what you showed until 2032 and beyond, I think there'll be a very strong growth trajectory of the auto component industry as well. Yeah.
Okay, Vinny sir, thank you for this perspective. But let me take you through towards the tariffs, because this is, I think, reciprocal tariffs or the tariffs are the hottest topic nowadays. With India recently, I think achieving a trade surplus in auto components, right? How
Right.
significant is this surplus with the US, and what are your expectations regarding tariffs moving forward? Any geopolitical scenario you can see emerging from this tariffs coming around?
So I think we live in a very challenging world, especially with what you spoke about, the geopolitics. Interestingly, when I made my opening remarks, I mentioned to you that the auto component industry in India is quite an export competitive industry, and U.S. happens both U.S. and Europe are our two key markets, and both almost equal in size. So last year, we exported about $6.79 billion worth of auto components to the US. And US exported to India just about $1.7 billion worth of auto components, with a trade surplus exceeding 5 billion US dollars. That's almost 10% of the export surplus that India has with the US. So now coming to the issue of reciprocal tariffs, or the tariffs that the US invoked on the derivatives of steel and aluminum on 13th of March. I would say that the situation is somewhat, or rather very, very fluid, because you see, the competitive position of a nation depends upon what tariffs are also imposed on our other competitors. So let's say China has now a tariff of 20% plus on what they already had. Similarly, Mexico and Canada, they were sort of hiked to 25%, but for a month they have a leeway. So it's a very, very fluid situation at this point in time. And to be very honest, well, while it worries us, because no business sort of likes insecurity in terms of the policy environment that we play in, I would say that, well, even if worst came and if we were to literally make our duty zero, we see no threat per se, because US is a very high cost producing nation. Okay. And fortunately or unfortunately, there is no US OEM in India today. So in some sense, US made auto components uh, having a sizable market in India is also somewhat questionable. But I wouldn't jump the gun. We are all very well engaged with the government in terms of the negotiations that are happening. And we have full faith in whatever the government negotiates on our behalf. But as I said, it is still very, very fluid and pretty much a wait and a watch situation.
Thank you, Vinny sir. I think everybody is waiting and watching right now, because it's very, very uncertain period for the tariff
True.
side.
True.
So let me move to the question number two for the audience. Do you see another opportunity for India amidst the recent global trade uncertainty? You can give your answers. Yes, or A, B, no, and can't say. I wait for 30 seconds, and I move for the another round of discussion. Do you see another opportunity for India in this recent global trade uncertainty? So thank you. Now, Shailesh sir, let's move towards the technology and the consumer preference and its role in the domestic and the export market. Maybe I can come back to Shailesh sir. Shailesh sir, you spoke about the growth and the numbers, what you are been achieved in recent time for the EV, and how the penetration going to be for Tata Motors in the EV in the future. But, do you see any change in the consumer preference? Because we usually we say that Indian consumers are maturing. Are we expecting this to happen, or continuously, or also we are expecting some average selling price of the vehicles going up because of this change? Can you share some examples for the industry or
Sorry,
the
you said consumers are. I just missed that line.
consumer maturing in their needs of when they
Okay.
opt for the cars, right? For the features and all, right? So,
That's
are
right.
we expecting this trend to continue? Is it going to impact the average selling price in the vehicle? And can you share some example from the industry or from the within the Tata Motors you must have experienced?
You see, clearly, what we have been seeing in India is a shift in the consumer preference from, say, rational needs to more emotive aspects. For example, a decade or so earlier, the key consideration for car purchase used to be like price, mileage, while now we see growing consideration for styling, features, safety, etc. And a key factor, driving this change has been the changing mix of customers. And if you really would have seen the data that India is a country of younger citizens. The median age of India is 28 years, and in car, particularly talking about the car buyers, seeing that nearly two-thirds of our car buyers are less than 35 years of age. And therefore, with a car buying market that is only getting younger, we are seeing a shift in preference towards new tech and feature-rich cars, which are relatively expensive cars. And therefore, as a result, we would have seen that over the past decade, the median price of cars has nearly doubled. Also, the second factor for rise in the average selling price is the growing customer preference for SUVs. This is in line with actually the global trend. Globally, also we are seeing this trend. But SUVs have emerged as a dominant body type in the PV market, both for aspirational as well as functional reasons. And I would say functional because on Indian roads, SUVs are seen as a more practical car with higher ground clearance, command seating position, better interiors, safety, perception of SUVs. So it's a mix of aspirational as well as functional factors. And therefore, you have seen the rise in launch of SUVs over any other body type. And as a result, the SUV salience has grown from, say, 26% in FY20 to nearly 55% in this particular financial year. So generally, SUVs have also a higher, ASP, and these are very feature-rich cars. Additionally, the PV industry is also undergoing this rapid regulation harmonization pushed by the government. Whether we talk about safety norms or emission norms, and the gap in safety and emission regulations between India and rest of the world is being rapidly bridged, and we have seen how fast we have transitioned from one emission norm to the other, and how fast the safety norms are changing, and therefore this is all resulting in increase in ASP or the price of the vehicles. So while emission regulations are tightening, consumers are also becoming more environmentally conscious, and therefore CNG cars and EVs all are growing at a fast pace. Also, which is the reason behind ASP increase. So, from multiple direction, you are seeing that the average selling price of cars in India are increasing, and I believe that this is going to continue because regulations will become more stringent. Also, 85% of the car buyers by FY20 will be Gen Y and Gen Z customers whose purchase considerations are likely to be based on, more emotive aspect. They look for feature-rich cars. So this trend will also continue, and the impact on demand because of increasing ASP actually will be taken care by the rising personal, disposable income, which will drive greater demand for vehicles in the higher segment. So yes, the ASP of cars will continue to increase, but fortunately for India, the rising personal disposable income will absorb those increases, and the new generation, Gen Y and Gen Z, will also drive the need for feature-rich cars.
Okay, okay. Sir, well, let me take you through the some of the variants and features. I think when I see the Tata Motors portfolio, I see that in your portfolio there are number of variants because I come from the production line. I think it is very difficult to manage for the production people, for the sales people, and for the dealership level also, for such high level of variants. How has this helped Tata Motors to cater the diverse consumer needs? Are we seeing a notable rise towards the high-end feature vehicles like ADAS or connected cars or automated gears. So what's your take on this, sir?
Yeah, it's a very interesting question, and I understand, you having worked in manufacturing would see this as a complexity, not only from manufacturing perspective, but also from a sales, uh, pitch perspective. It becomes a bit complex. But let me make you understand two halves of this varianting. One emanates from the strategy of multi-powertrain. So we are possibly the only manufacturer which is offering for the same model or nameplate diesel, petrol, CNG, as well as electric powertrain. So it increases the number of variants. And while it looks complex, but every powertrain has a specific customer base. So a CNG customer might not be looking for an electric vehicle or even petrol or diesel. And similarly, an EV buyer mostly is looking for electric vehicles. So every customer segment is different. And therefore, for them, this complexity does not. So it's a complexity at a manufacturing level rather than a customer level. So this is one source of varianting, and this has really worked well for us. And let me give you an example. When we had a Nexon, which was a petrol and just a diesel variant, we were selling about, say, in FY20, about 4,000, 4,500. And with this multi-powertrain and also additional trims of bringing higher features into mid trim levels, significantly expanded the prospect of that nameplate. And it went up. Today we sell about 15, 16,000 a
Yes.
month. Same is the case with Punch. When we launched the car, we were selling about 7, 8,000. Today we sell about 16, 17,000. It's the highest selling car in the country. So therefore, varianting has really helped because every variant, if it is linked to a new customer segment, it works. If it is proliferation of variants for the same customer segment, it's complexity. So that is how our approach has been, and this has really benefited the strategy of Tata Motors. And I mentioned earlier, that's the reason why in a market which would have has grown from 2.7 to 4.3, in that market we have grown 4.5 times.
Yes. Yes, that's right. Any notable rise in the ADAS side of or the connected cars on the automotive gear side in within the Tata
Yes,
Motors?
I think
Any?
continuously we are seeing rising penetration of all the ACES feature as we call it. You are seeing
Mhm.
from very low penetration to very high penetration, not only in the higher priced car, but also it is flowing very fast to the lower segment cars also. When it comes to these connected car or autonomous car features, ADAS features and all. And also the tech is becoming cheaper. There are, say, camera based ADAS,
Yeah.
higher end cars will have LiDAR base. So there are a lot of cost efficiencies which are also coming in.
Yeah. Thank you, Shailesh sir. So let's move to Vinnie sir again, sir. I wanted to understand the perspective from supplier side on this changing preferences and the trade. Do you see is there an opportunity to increase the exports also? Because we see the government has given the PLI for the cleaner technologies. Do you see that this changing preferences like ADAS or the connected cars can help us bring more export to the market, or what's your take here?
Yeah, sure, definitely. So I would look at it somewhat differently. I would say that, look, you have to be relevant to your customers, right? Whether it is a domestic market or the export market. And the Indian auto component industry definitely needs to up its game when it comes to technology. Okay. And let's say if globally you have a 25% share of EVs, or if you say that 50% the BOM of a vehicle is electronics, right? All sorts, including ADAS and whatever actuators and safety devices, whatever you may have. You have to focus on those areas. So you have to be relevant, and therefore you need to up your game when it comes to technology. That's one. But that's not the only factor when it comes to exports. There is a geopolitics that plays a huge role. And what we are witnessing today is a huge interest in sourcing out of India from many OEMs and tier ones. Okay. Also, I would say that India needs to play I'm saying on a larger level, when you look at the infrastructure, when you look at the ease of doing business, we also need to up our game at this so that, we facilitate exports. And of course, I mean, ease of doing business cuts both ways at the domestic market or exports, but exports more because you have delivery commitments and schedules which are much more tighter than the domestic market. So yes, of course, we need to sort of be technologically relevant, and we also need to look at other opportunities. Let's say there's a huge interest in India when it comes to casting and forging today because of very, very tough environmental norms in Europe or in the US. I mean, we should be smart enough to grab whatever comes our way, which sort of course, suits what we can deliver. Of course, we have to up our game on the technology front, which cuts across again the domestic market and the international market. Yeah.
So wonderful, Vinnie sir. Let's see that how we can cater more exports from India on these technologies. So very quickly, sir, Shailesh sir, if you can answer some of the hot topic again, which is running in market is generative AI. Do you see something integrating towards AI into the Tata Motors? Maybe it's on the product offerings or somewhere else into the operations.
Yeah, I think AI, generative AI, and AI-driven solution is being applied in products big time, but and also as you said, manufacturing processes, but also in front end customer experience to
Okay.
enhance, and manufacturing it is more around efficiency, uh, but when it comes to products. Let's take, for example, all the technologies that we discussed, ADAS related technologies or intelligent cockpit, um, voice recognition assistant to enable predictive diagnostics, etc. See, it's being extensively used in the product now. And also, we are leveraging AI for enhancing the customer experience, driving intelligent insights for marketing actions. So, for example, the AI-powered chatbots to provide real-time solutions to customer queries, or whether it is diagnostic, for vehicle repair. We are using extensively the AI-powered tools. Also for charging network, the geospatial analytics, understanding of customer sentiment. There are many areas where we are applying this, and for customer experience enhancement. In manufacturing, we are using AI to enhance productivity, minimizing downtime, improving the operational efficiency, and also to strengthen the workplace safety. So there's holistic application of AI across the board, and it is being extensively used.
Okay, okay. So thank you, Mr. Chandra, and thank you, Mr. Vinny. I think for your valuable insight. I think it is very clear that there is a significant growth, confidence in India's growth, and we expect ongoing investments in Indian market. But I think as Vinny sir talked about the uncertainty into the global trade and the reciprocal trade, I think we need to see how India can capitalize this uncertainty as of now to export this, and let's see that how the government takes the case forward when they go to the negotiating tables, right? So let's see that. Let me conclude this panel discussion, and I have another question for audience now. um, is your company planning to increase exports from India? I give 30 seconds to the audience. A, yes. B, no.
I'm curious to know the answers.
Sure, sir. Okay, so let's move to the answers what we have recorded as of now. Uh, is your company, the question number one, what we asked you, or is your company planning to increase investment or add capacities in India? 81% says yes. And I think this is very in line, which I am experiencing. I think Vinnie are also experiencing, and Shailesh are also experiencing that every supplier I have seen from last 3 years is focusing on India. They are putting some new plants every time to Indian market. The next question which I asked was the do you see another opportunity for India amidst the recent globe trade uncertainty? I think yes. Again, and this is a global I can say the Asia Pacific audience. And yes, we are. They are saying 66% saying yes, and Indians are also, I think, very optimistic about this trade uncertainty. When you speak to people locally in Indian market, yes, and but 31.8% say can't say. So there's no scope of no, I think. But yes, let's see that how the things will roll out. And this is the last question which we asked: is your company planning to increase exports from India? Again, 64% says yes. So I think more numbers are coming to you, Vinnie sir, when you compare the automotive market.
Great.
So I just open the question and answers for the audience, and let me take you first questions uh, from the market. Uh, okay, let me take you the question from one of our audience, that when economy is doing well, why automotive sales is down in Q1 2025 with high inventory of vehicles at dealer end. Shailesh, would you like to answer, or you want?
This was a question from my side also, by the way. I don't know who has the answer to this.
No, sir,
So,
let me let me tell you then. So,
that was
so
on a
we are
lighter
yes,
note, but yeah, lighter note. But I must say that it's a tale of two cities. While SUVs are growing very phenomenally by 11-12% a year, the hatches have declined, which is hatches is reflection of the entry side of the new car market. And that's why I use the word new car market, because when you see dipped into the data of used car market, that's growing phenomenally. So the
Right.
regulations which have increased the price on the entry side is being taken away by the used car market. So that answers the question of economy doing well. If you take the sum of the two, possibly there will be growth that you will see, which is tremendous, right? I'll not get into the topic of inventory building. It's a very sensitive and emotional topic on both
Right.
the
yes,
sides. And therefore, better to stay away from that, because there's no authentic information.
Right.
As far as that is concerned, you'll have two different data points and views. But I think I have answered the question on why economy is doing well and the auto industry not doing. So,
yeah. So that's let me move to the another question then. I think the another question say, is there government support to enhance the charging network to enable EV adoption? I think
yeah,
yes. I think PM drive has been recently given. Maybe Shailesh sir, you can also add
no,
something here.
absolutely. There have been several initiatives from the past also where private players were allowed to sell, electricity through, charging infra players, where it was only allowed for the discoms and also starting from there to PM drive, which has allocated nearly 2,000 crore rupees for installation of and expanding the charging infra. So there's support which is coming from the government, but I think market forces will rather be
Right.
the bigger factor in terms of expansion of charging infra. Given that all players have got into this space of electric vehicles, and each player is now putting effort to expand the charging infra, working closely with people who want to invest in the charging infra space. I think government's 2,000 crore coming from PME drive is just a facilitation, right? So I believe that government can only facilitate, can't drive a growth of charging infra upwards of 500,000, 1 billion, and so on, which is needed by the country for the level of penetration that we are talking about. But I think the 2,000 crore allocated by government is going to kickstart the process of faster expansion of charging infra.
Okay, thank you very much. I do have more questions coming in, but yes, I think we have a time. It's already 59 minutes. So I think thank you very much, Shailesh sir. Thank you very much, Vinnie sir. We will come back to you, the audience, with the answers, whatever questions you are posting right now. But yes, we that will can be done from our side. So thank you very much, Vinnie sir. Thank you very much, Shailesh sir, for joining us today. It was a very insightful discussion with you both.
Thank
Thank
you.
you.
Thank you,
Very much.
Pleasure. Yeah.